oil prices we've been talking about for so long and thinking that the consumer would be really not able to spend, but you're saying it's not the case.
Yeah, so far that hasn't been the case. We've seen gasoline prices, of course, shoot up, and it just doesn't seem to have affected consumer spending as much as people thought it was. Each new report comes out, we're like, oh, well, the consumer actually did a little bit better in the first quarter than what people thought they were going to do.
Well, okay, and Justin, you know, if you look back over the last 3-4 years, you know, yes, gasoline prices are higher on a year-over-year basis, but they're not higher than they were, you know, 2-3 years ago.
Yeah, I think that's a really key point, that people know what, you know, over $4 a gallon gas means to them.
I mean, they don't welcome it,
They
obviously.
don't welcome it, but it's sort of the unknown that really seems that does seem to really affect consumer behavior more than just a return to levels that we've seen before. We've also seen some other things happen. People even now are driving way less than, or significantly less than they did before the recession, and we've seen, you know, with the sort of more efficient cars come out, that, you know, that people have better mileage on their cars. And finally, Detroit is offering cars that people want now with high gas prices. So it used to be that a lot of car spend would sort of leave the U.S. and here, you know, more of it's staying.
So prices do affect behavior, though. I mean, people will adapt their driving habits to what they're paying at the pump.
Yeah, and they have. And one of the things, you know, that people have been through a gas crisis already, or you know, something like a crisis in 2008. So people know where their bus stop is. They, you know the numbers of the guys in the carpool, so they can readjust behavior, and that leaves more to spend on other things.
And we have the retail sales was up 0.8% in March. We just had that on the screen, and it sort of follows a string of a lot of economic data that shows that we're strengthening. Do you think consumers, just their mindset and hearing, you know, week after week, month after month of steady growth, that they're feeling just a little bit more confident that if they do make that big purchase or continue to spend, that they're going to be okay, that we're not going to get knocked back down again?
Yeah, that seems to be part of it, and part of it also is that you know, notwithstanding sort of the last disappointing jobs report, that the jobs figures have been better. There's a lot of people who think that the jobs numbers have actually been understated. We saw a big boost up in the saving rate, which suggests that that's true. Sorry, people have more savings to tap. So all of that's helping. Okay,
and you study these consumer figures. Is there a little bit of a fatigue of, you know, sort of saving? People who say, you know, gosh, it's been 4 years. I've really tightened my belt. I really want to, like,
buy new socks?
Yeah.
Yeah, I think that there's a lot of that sort of pent up demand. And also, we're still at a very low base. I mean, you talk about, you know, people are like very excited about, you know, sort of, you know, maybe a 14 million annual rate on cars. Well, that's really low relative to what we've had before. So we're still, you know, what we're doing is better, but it's still not great compared to what we had before.
No, of course, and you know, you wonder whether we're ever going to get back to those 2007 levels of consumption and spending.
Yeah.
And Justin, before we let you go, I just have to say, I sort of never hear a report on consumer spending without talking about the weather. And I know that this winter's been very mild. You put in your story that a lot of people decided to redo some painting on their homes, perhaps, and do that kind of thing and get out and spend. Will we see that spending then slow down on things like that going forward because people just sort of pushed it up further?
Yeah, it's very interesting with the weather effects. Sort of the most recent research, Macroeconomic Advisers has taken a deep look at this. I think Goldman Sachs has too. What happens is it does boost activity, but it doesn't borrow from the future. So just because you buy an extra T-shirt now doesn't mean that you don't buy T-shirts, you know, come May and June.
Yeah. Okay. Because I presume that we're sort of stealing some of the
right.
summer, you know, spending activity.